Welcome to the deep dive. Okay, so we're looking at the Q3 2025 Netflix shareholder letter today, and it's really kind of a fascinating read, almost paradoxical.
It really is. That's a good word for it.
Yeah, we want to sort of strip away the corporate speak, get under the hood, understand their actual operational health, their growth strategies globally, and some pretty big bets on tech they're making.
And that paradox you mentioned is key because, if you just glance at, say, the operating margin, you might think, maybe a tough quarter.
Right, looks like a miss.
But then you dig a bit deeper and you see, actually, operationally, it was a victory lap in some ways. Record engagement, strong growth drivers,
Yeah.
all kind of masked by this big unexpected financial hit.
Exactly. So that's our mission today, basically giving you the quick version. How did Netflix manage to get record view share, really scale up their ad business while taking this massive one-time financial hit and still line up what looks like a monster Q4?
Well, let's jump right in where the confusion starts, the financials. So revenue, actually fine, grew 17% year over year.
It hit $11.510 billion. That was pretty much right in line with what they forecasted.
Good. So where's the red flag then?
The operating margin came in at 28.2%, and their guidance was 31.5%. So yet noticeably lower.
Oof. Yeah, that's more than a 3-point miss on the margin guidance. That sounds not great. What happened there?
It boils down almost entirely to one thing, a really big one-time expense. We're talking around $619 million.
Wow. One expense. What was it for?
It relates to this ongoing dispute they have or had with Brazilian tax authorities. It's about certain non-income tax assessments.
Hold on. $619 million for a dispute covering, 2022 through Q3 2025? I mean, I get it's maybe technically non-recurring, but isn't that huge? That kind of suggests maybe a big oversight. Or maybe risk elsewhere.
Yeah, that's the natural question, and they definitely try to address that in the letter. They stress it was, specific, now settled, and specifically about non-income tax in Brazil.
Okay. But the size of it, it's significant. It got booked as cost of revenue, and that alone pulled the Q3 operating margin down by over 5 percentage points.
5 points, just from that.
Yep. So their argument is, take that out, and they would have actually beaten their margin forecast pretty comfortably.
Ah, okay. So it's like a financial cleanup cost that just happened to land in Q3.
Exactly. And it's the sole reason they had to adjust the full year 2025 operating margin forecast down a bit from 30% to 29%. Just this one Brazilian issue.
All right. So if we mentally sort of fence off that Brazilian blip, where's the underlying health shining through?
Global growth.
Yeah.
Especially if you look past the headline currency effects. International revenue is actually really strong underneath.
Okay, give me an example.
Take Latin America. Reported revenue growth was 10%, but if you adjust for foreign exchange, FX neutral.
Strip out the currency swing.
Exactly. That growth rate jumps to 20%.
20%? Wow. FX neutral in LATAM. That's actually really strong momentum for a market like that.
It is. And APAC, Asia Pacific, tells a similar story. Reported 21% growth, which was 20% FX neutral. So barely any currency impact there.
So the core global expansion engine is running well.
Fundamentally sound, yeah. Which brings us right to their main goal, right? To entertain the world.
Yeah.
Because that's what drives everything else, retention, acquisition.
And that entertainment strategy, clearly it's clicking. Because the engagement numbers, the view share, despite all the competition out there.
They did exceptionally well this quarter on that front. They actually hit their highest quarterly TV view share ever in two really key markets, the US and the UK.
Ever? Wow.
Yeah. If you look back to, say, late 2022, their share in the US grew 15%, hitting 8.6%, and the UK even faster, up 22% to reach 9.4% view share.
That's impressive growth considering how crowded it is. What content was actually pulling people in? What were the big drivers?
Well, scale and recognizable hits were definitely part of it. On the movie side, Happy Gilmore 2.
Not yet.
Just huge, 126 million views. Set a new Nielsen streaming record, 2.9 billion viewing minutes just in its opening weekend.
Okay, that's not just a hit. That's like a cultural moment concentrated into a weekend.
Exactly. And they can create these moments globally, too. The Thursday Murder Club, for instance. 61 million views. And get this, it was the first feature film this century to top the overall UK TV rankings. Not just streaming, all TV, according to Barb Data there.
That's a statement.
And series.
Powerhouses. The return of Wednesday Season 2 pulled in 114 million views. And then a big new hit, Yoon Tame Ned.
Oh, yeah. Heard about that one.
87 million views, and they renewed it for season 2 almost immediately. Just solid anchors for the service.
But the thing that really jumps out, strategically speaking, is how fast they seem to be able to launch new stuff, new IP that's instantly, like, monetizable beyond just subscriptions. Which brings us to K-pop Demon Hunters.
Oh, absolutely. That film is kind of the perfect case study for their multi-platform strategy, really firing on all cylinders.
The view numbers were insane, right?
Record-breaking for them. 325 million views. It's now their most popular film.
Ever. But like you said, the really interesting part isn't just the views, it's the immediate monetization outside the core subscription.
Right. Tell us about that, because that feels like a glimpse into the future, how they see value growing.
So they announced these huge, unprecedented global toy deals, co-master toy licenses with both Mattel and Hasbro simultaneously.
Both. Usually it's one or the other.
Exactly. It shows the scale and speed. When you create something that hits critical mass that fast globally, you can kind of rewrite the playbook for franchise building. Skip the slow burn.
And the demand was real, organic.
Apparently so. They pointed out that characters from the film were already among the top 5 most searched Halloween costumes. So people were seeing it, loving it, and immediately wanting products. That kind of organic pull drives those big licensing deals.
That speed, from launch to cultural saturation to major licensing, it's incredible. And it kind of sets up their other big strategic lever nicely, advertising. Sounds like Q3 was good there too.
Their best ad sales quarter ever, actually.
Okay.
Yeah. The ad business is clearly moving past the, testing phase and becoming a real growth engine. They mentioned doubling commitments in the U.S. upfront market.
That's significant.
It is. And they're projecting they'll more than double their total ads revenue in 2025. Now, granted, it's off a relatively small base compared to subscriptions.
They're still early days relatively.
But that growth rate is aggressive, and they seem confident they can hit it, partly because they're really building out the tech stack behind it.
Right, the plumbing needs to be there. What are they doing on the tech side for ads? The letter mentioned some integrations.
Yeah, basically making it easier for big advertisers, especially automated or programmatic buyers, to spend money with them. They've fully rolled out their own Netflix ad suite, and importantly, they announced they're integrating with Amazon's DSP. That's their demand-side platform globally.
Okay, plugging into Amazon's ad tech is a big deal.
It is. It signals scale and maturity. Plus, they added AJA's DSP in Japan. It just shows they're connecting to the main highways of digital ad spending starting Q4.
And speaking of tech, generative AI, it wasn't just a buzzword in the letter. They gave some really specific examples, both for members and for like making the actual shows and movies.
Yeah, it seems pretty integrated already, not just some far-off thing. For members, like you listening, they're beta testing this conversational search, so you can basically just talk or type naturally to find stuff.
Like, show me funny sci-fi movies from the 90s.
Exactly, something like that. Should make digging through that huge catalog way easier.
Okay, that's cool. But the creator tools part, that seemed really potentially game-changing. You mentioned Happy Gilmore 2 earlier.
Right, so for the opening flashback scene, the filmmakers used Gen AI, apparently combined with machine learning and this proprietary tech they have called Eyeline.
Eyeline, what's that?
Sounds like their own high-end in-house visual effects tool. Anyway, they use this combination to help with the whole de-aging process for the characters.
So Adam Sandler got an AI assist to look younger instantly. That must save a ton of time and money in post-production.
You'd think so, yeah. Streamline's a really complex process, and it's not just for fixing things after filming. They mentioned using Gen AI during pre-production for a different project, Billionaire's Bunker.
What for?
For pre-visualization, like rapidly generating ideas for wardrobe, for set designs. They can iterate super fast, try out different looks way cheaper and quicker than building physical mock-ups or endless sketches.
Wow, okay, so you combine that kind of production efficiency with the instant IP success like K-pop Demon Hunters that really builds momentum heading into Q4. And that Q4 slate looks absolutely stacked.
It really does. It feels like a statement. You've got the return of massive established hits, the final season of Stranger Things, The Diplomat Season 3.
Huge audience drivers right there.
For sure. But they're also really leaning into being a destination for major filmmakers and cinematic events. Rian Johnson's next Knives Out movie, Wake Up Dead Man.
Can't wait for that.
Guillermo del Toro's Frankenstein. And Catherine Bigelow's new film, A House of Dynamite. These are big, big swings.
And strategically timed, too, right around
Yeah.
holidays. Plus, they're dropping in those live sports events they bought.
Exactly. The NFL Christmas Day doubleheader, Cowboys versus Commanders, Lions versus Vikings, and that Jake Paul versus Tank Davis boxing match. You put those huge, guaranteed live audiences right in the middle of all that new premium scripted content. It's a powerful combination for Q4.
Okay, so all this, the content wins, the ad growth, the tech,
Yeah.
how does it tie back to the overall financial health? You mentioned the FCF, the free cash flow.
Right. Despite that big Brazilian tax payment hitting the books in Q3, their underlying ability to generate cash is improving significantly. Q3 free cash flow was $2.66 billion. That's up quite a bit from $2.19 billion this time last year.
That's strong. And they raised their guidance for the full year, too, didn't they?
They did, significantly. They bumped the full year 2025 FCF forecast up to around $9 billion.
$9 billion, wow. What was it before?
The prior forecast was $8 to $8.5 billion, so a nice jump. They said it reflects some timing of cash payments shifting and also slightly lower content spending than maybe originally planned.
So, managing the checkbook tightly while still spending big.
Seems like it. It shows financial discipline even while they're executing this incredibly ambitious and expensive global content plan. And importantly for investors, they're returning cash too. They bought back 1.5 million shares for $1.9 billion just in Q3.
Okay, so let's wrap this up for everyone listening. Key takeaways seem to be: 1, the engagement is real. Record view share validates the global content plan is working. 2, that $619 million Brazil tax thing was a big hit. Yeah, but treat it as a one-off, a financial cleanup separate from how the actual business is running day to day.
Right. Don't let it obscure the underlying operational strength.
And 3, those newer monetization engines ads, and especially this super fast IP licensing like we saw with K-pop Demon Hunters,
Yeah.
they seem to be scaling up much faster than maybe people expected.
Absolutely. And what's really fascinating, I think, is how those pieces start to connect and accelerate each other. You've got the K-pop Demon Hunters example, massive global hit, instant cultural impact, unprecedented simultaneous toy deals with Mattel and Hasbro.
Right, the speed of it all.
Exactly. Now, couple that speed and reach with the tech efficiencies we talked about. Using Gen AI and tools like Eyeline to, say, de-age actors rapidly, or to pre-visualize sets and costumes almost instantly.
So faster creation, faster launch, faster monetization.
Precisely. Which leads to the final thought, maybe something provocative for you to chew on. When a company can leverage tech like this to dramatically speed up production and launch new IP that goes globally massive almost overnight and sign major merchandising deals while the thing is still topping the charts, what does that acceleration do to the whole idea of an entertainment franchise?
How long does it take to build one now?
Exactly. How much faster can they create the next big cultural touchstone? And maybe more importantly, what does that speed and scale mean for competitors, especially the traditional studios still operating on, slower, more legacy timelines and processes? It feels like the pace of creating and scaling global entertainment phenomena might be fundamentally changing.